What's a good stock to invest in right now? With the volatility in the political and economic climate, you better be careful. So we are going to talk about this implicitly in this video. Now, to do this today, I'm bringing Kelly Korshak, who is the algorithm designer. He built iFlip. He is the most genius man I know in this category. So we're going to cut away to an interview right now to hear from what I think world-leading expert in this category. So welcome back, and we have with me today Kelly Korshak, and we are talking about what is a good stock to invest in right now, given the volatility of the market, the war, inflation, increased interest rates. So specifically today, we're going to talk about three things. How do you get started picking a stock? What's the due diligence process? I'm going to share with you my number one app and what I use. And will there be any tax consequences that you have to worry about? So to have that conversation, I'm bringing in the expert. I'm bringing back Kelly Korshak, who is with iFlip, designed the software and all the algorithms, what we call smart folios. So Kelly, welcome back.
Good to see you again, Laura.
So let's talk about what's a good stock to invest in right now. I mean, with the volatility that I just, talked about with the Ukraine, the war, this new green energy effort, which, you know me, I'm a gas and oil investor, so I'm 100% against it. But what do they do now? You're brand new, you're watching this YouTube channel and you're looking around.
Well, the fundamental thing when you're looking to buy a new stock or you are a newbie to this area is to buy something you know. Warren Buffett said that, and I'm not quoting him as the greatest investor of all time, but it is, and it does make sense. Buy what you know. We all mostly have Samsung phones or Apple phones. We can buy Apple or Samsung. Most of us buy things off of Amazon. We can buy that. Stick to what you know. However, if you want to get a little more advanced, which I think all of us should, they should look to see really what they're really after. Are they after the idea of adding income to their portfolios, or are they after growth? If it's income, try to buy things that produce it, supply chain management companies or supply companies that supply restaurants or energy companies that supply fuel. Or if you want growth, then you find something in the technology field. Those are the usual ones, Apple and Google.
And so talk about kind of age appropriate. I know you've talked about that from a due diligence standpoint before. If you're a little younger, what should you be looking at? If you're a little older, what should you be looking at?
Sure. If you're younger, you should look at aggressive growth stocks. You should not be concerned about dividends. If you're older, you should be concerned more about dividends and stability of your portfolio and not so worried about growth. Mm-hmm. Now, growth has a meaning that goes beyond what most people think. It doesn't just mean the year-over-year advancement of a stock. It also means how that stock year-over-year advances. So even the very best stocks, if you choose growth, mm-hmm. young or old, have a lot of volatility. And you must expect that. A young person absorbs volatility much better than an older person does who's concerned about his retirement.
And so what are other due diligence, I'd say, tips or insights do you have for those that are out there? I mean, there is just a model of, you kind of park in the S&P 500 and watch it ride for a while. Is that for somebody younger? And that's really not a stock. And again, this is about what's a stock mm-hmm. to invest in. Mm-hmm. Give a few more insights to that.
I do. I mean, at the end of the day, it's like when you invest in anything, whether it's a stock or a company, it comes down to, I call them the 3 Ps: the people, the performance, and the product. What are they? All 3 must be investigated. The great thing about the stock market is all of that has already been done for you. Those stocks wouldn't be publicly listed if those 3 things were not already performed by a bunch of attorneys and the SEC. So in the case of, for example, Exxon, we may not know the leadership of the company, the people, but we know what the product is. It's oil. And we know what their performance is. And that's something that we can look up historically very easily. And so we know that when you look at the final 2 Ps, the product and the performance, you can find out who those people are pretty easily. and say, hey, those are the people that gave you that product and performance. All three should be good. That is the main due diligence approach to investing in anything. So whether it's a stock or a privately held company, the triple P is the thing you should look at.
So talk to us about iFlip. So when people decide that they want to start the software, and by the way, I'm going to give you that at the end, so stay to the end. I'm going to give you a link to get a free software app from Kelly and the team. But if they're going to pick as they move into iFlip, or talk about the smart folios. Do they pick individual stocks? Do you do it for them? How does that work?
Right. If someone downloads our product or onto their phone or goes to it through a web portal, and they set up an account and fund it with either their own cash or from an existing brokerage company, the fundamental thing you can do differently on our product that you can do on any other product, aside from buy and sell, is to be able to choose smart folios. A smart folio is a lot easier to choose than trying to buy a portfolio yourself or assemble one. A smart folio has been assembled by a computer in most cases.
Yep.
And that computer looks at things in a mathematical way, and it puts them together in such a way to be able to form different risk profiles when they go from conservative, moderate to aggressive. So the fundamental difference you get when you come to a flip platform and invest is to simply know that it's a computer choosing these things for you based on the computer's thoughts of what are the best expectations for this group of stocks on a go-forward basis. That is the one fundamental difference, and that can't be found anywhere else.
So talk about the AI, the artificial intelligence that goes with that computer picking those smart folios.
Correct. When the computer picks a portfolio, that is just done based on large sorts of correlation. I won't go into what that all means, but it means how they behave together in unison. But what happens after that is once the stocks are assembled inside of a portfolio, they are managed by artificial intelligence. What does that mean? In the most simple way, it will actually buy and sell the securities for you without any intervention from you based on the risk reward it understands it to be on a go-forward basis. This is a newer approach, although it has been developed for over 12 years, to managing stocks through computers. So not only does iFlip put together these portfolios using mathematics, but it actually manages them once they're in the portfolio, smart folio, by buying and sell them periodically, changing them periodically based on what the computer expects to be the best expectation on a go-forward basis.
So I always say that the software keeps you safer, right? So I don't know if that's accurate words, but from your words, how is that so? Because here, if you're out here, someone's Googled our YouTube video here, and we popped up first on what's a good stock to invest. Obviously, we want to move you to our software, and the safety mechanism, I think, is a big part, especially as a beginner.
I totally agree. I think it's not really about choosing the best stock. What it's really about is choosing the best assembly or group of stocks that matters. We can make a group of stocks behave differently than any individual stock. So the idea is to put together portfolios where the group of stocks behaves better than any of the individual stocks because of their individual behaviors at different times of the market cycle. So that is something that can only be done mathematically. It is not necessarily intuitive. And we feel that combined with the ability to aggregate them in such a way where you can choose your risk profile, conservative or aggressive, is a huge advantage.
So last and quick topic on taxes. So let's talk about from a beginner to a seasoned investor, say moving into iFlip, what do they have to think about or know about in the tax area?
Generally, people with accounts that are between 100 and 200,000 or less don't really have to worry so much about tax consequences, especially from the buying and selling of stocks intermittently throughout the year, because generally the amount of money that is made on individual transactions is very, very low. And even if it's taxed at your normal income rate, those things generally can be more than managed by not holding a stock that may go down 10, 20, or 30%, where you lose the entire value by a percentage of the entire investment, as opposed to just the capital gain that you or loss that you might have at any given time in individual stocks. So the tax consequence is something not to really be too deeply concerned with, but just note that at the end of the day, things that are held for more than a year get a long-term capital gains rate that is, say, 20%, 15 to 20, and things that are bought and sold very quickly or less than 1 year are taxed at your income rate, which generally will be higher, 20 or 30%. So, and even sometimes higher. Those things are very important for someone that bought a lot of stock and it went up a few 100%. Those things matter. But for most people, this is really a non-issue.
All right.
So thank you, Kelly. I love this man's advice. He is my go-to anything stock market related and now cryptocurrency related. So before we end, I want you to go subscribe to our channel. I'm here 5 days a week. Sometimes I have guests. Mostly it's me just giving financial literacy tips to you and your family. Click the notification button, share it with your teenage kids, share it with your family. You all need to start this conversation about money in your household. And I need you to click below to go get this iFlip app. All of you can begin it today without any obligation and just start seeing how you can be protected in the market. Now, as we end, I want you to go take my financial personality quiz. It's going to put you into one of 4 profiles. And if you're ready to invest, start putting money into iFlip today. A lot of our clients use that as a wealth account. Then once we're done with that, we're going to send you out an application. Make sure you click the button that you either want to talk to Kelly or someone directly at the iFlip team. And if you want to get a Roth IRA or corporation, just put it on that app and we will move it around to our teams to help you get started today. And we'll talk to you tomorrow.